If you want to make huge asymmetric returns, but you missed out on the dot-com boom of the 90s, or you missed out even on the cryptocurrency boom of 2017, well, don't worry, because we have another chance right now. One of the very best sectors to do this right now today is starting to form up in the precious metals space. But just like those two other massive booms I mentioned, the returns are offset by the amount of risk that you have to take and the volatility that you're going to have to hold through. But if you do it the right way, you can see the biggest investment returns of your life. Now, in this video, I'm going to break down 4 steps you have to know in order to avoid the risk and to get the gold. I'm also going to use an actual company that I'm researching right now as an example. Hey everyone, Mark here. In today's video, I am sharing an important learning opportunity that I had from sitting down with one of us street smart mining investment millionaires. He's made 7-figure investments into these natural resources mining companies. He's currently putting large sums of money in play into this very sector right now. But before I jump into that and explain all that to you, first, I want to let you know 2 things. So first thing, I'm hosting a meetup in Phoenix this coming weekend, October 24th. I'm hosting it with George Gammon. If you guys are a fan of George Gammon like I am, it's going to be really cool, the 2 of us together in Phoenix, Arizona, Saturday, October 24th. There's a link in the description that has all the information. So go to the link, click on it. And if you're anywhere in the area of Phoenix, Arizona, please come out and hang out. We're even getting the first round of drinks and food on us. It's free. We'll talk about whatever you want. Second thing is I am also having a 1-hour live presentation this coming Thursday. Again, more info, the links are down in the description of this video. All right, so let's get right back into it. So let me explain why I go search out this type of information, and then more importantly, why you should care, all right? So let's see, about 20 years ago when I really started digging into my own personal education, one of the guys that I was really listening to a lot, his name was Brian Tracy. If you don't know Brian Tracy, you should go find out who he is and start listening to some of his information. And he taught me this one concept that really changed everything for me. And the concept is simple, and that's quote unquote, success leaves clues. All right. Now, it's been one of the tools that I've used constantly to help me achieve more, find more success in the shortest amount of time. So if I explain it super simple, it's just basically you find someone else who has already achieved the level of success that you want. You want that, you want to achieve that. You find out what are the successful clues that they left behind, what are the things that they did, and then you do those same things, right? If you do about the same things they did, you should get about the same results. Now, since I started this YouTube channel only about 24 months ago now, it's been quite a wild ride. Luckily, I've been able to get access to some of the biggest investors, some of the biggest economists in the world. And I'm literally able to sit down with them one-on-one and have candid conversations off of the air and on the air. And I get to ask them basically whatever I want to become friends with these guys. And I'm talking some of the biggest, the best investors, analysts, billionaire investors. You've seen some of the people we've had on. And so, I've been asking them for their clues. What's their clues? What is their advice they can give me? And of course, I want that so I can follow along. And then of course, I share that with you. And today I'm going to share with you a few tips, a couple different investing disciplines that I've learned, which you should probably write down. So if you have a pen and a paper, probably grab that right now, write these down and start practicing them, since they're the clues that I've learned from other people. These are the things that I've been able to dig out, and they've helped me, and I think they're gonna be able to help you. Now, there's one of the most successful investors that I know personally. He's really street smart, especially when it comes to the mining investments, multi-millionaire. Over the last 12 months, or I should say over the last 12 months since the mining sector's kind of bottomed out, he's personally invested in, 1, 2, 3, really probably I think 6 or 7 plays that I know of that have been triple-digit returns, which is pretty amazing. And I haven't been able to convince him to come on and do a video interview yet, and he's really not that famous, but he is super successful. But the problem is he doesn't really want to come on video. So I grabbed a couple things from him, and I'm going to share those with you right now. Because I am friends with him, I've been able to kind of mastermind, work with him. We share a lot of ideas on mining plays back and forth. So anyway, here's one that we've been working on together. He had said that I could publicly disclose it. And so when we were talking about this, and he was trying to explain to me his viewpoint, which I always try to get someone else's viewpoint because it helps me. And he says the first thing is that when you're investing into these types of opportunities, and really applies back to .com and crypto as well as this right here, is that you have to be willing to undergo a roller coaster ride like this, up and down, up and down. If you can't endure that, or I should say you need to endure that roller coaster ride if you want to reach the final goal, if you want to get that payout at the end. If you can't do that, if you're not able to ride that up and down, then he told me that you're better off not venturing into that part of the world at all. He told me that, in his experience, he's had dozens of occasions where his timing was off, but his conviction was dead on, right? Like, I know I'm right. And I've had this. I'm sure you've probably had that too. And let's say that you entered into investment and then you've automatically seen it go down 10, 20, 30, 40, 50%. And you know that you're going to be right, but you have to weather that storm before what he says, making a bloody fortune. That's his word, not mine. Now, if you've been watching my channel, you know that I love both Bitcoin and gold. All right, I talk about Bitcoin and gold all the time. And of course, he knows I'm a big Bitcoin bull. I talk to him about it all the time. He likes gold. I like Bitcoin, so we talk about that. So he decided to use Bitcoin as an example, what he's talking about. And so you may know that Bitcoin has been the best performing asset in the world for the last 11, 10, 9, 8, 7, 6, 5, 4. Every year, basically, Bitcoin's been out. It's been the best performing asset. If you would have invested only $500 into Bitcoin in 2010, by 2017, 7 years later, you'd be worth almost $20 million, which is amazing, right? But what you probably don't realize is how hard it would have been to hold on to Bitcoin during those 7 years. So everybody, and I've talked to lots of people, man, if I would have only known about Bitcoin in 2010, I'd be rich. But you don't know what it would have been like to hold for those 7 years. So I want to give you a quick look at that. So as an example, in 2012, for 6 months, Bitcoin pulled back by 40%. It's a big drawdown, 40% between January and July. And then almost immediately following that, from August to December of 2012, it dropped by 37%. Massive drops. Now, if you survived that, then you had to suffer through the crypto winter. And that lasted a little over a year, 1 year and 2 months. Now, how much would you have lost holding through that? You would have lost about 83%. Amazing. So how does an investor deal with this volatility and drawdown? So yes, if you would have invested $500 in 2010, it would have been worth $20 million. But how could you have held through an 83% drawdown? Think about that, right? Because that's the question that you have to answer for yourself if you want to have success with investing in these types of assets. So how does an investor deal with the volatility, the drawdowns? Well, his response, or I should say what his first rule is that you would dollar cost average in at opportune times. So in other words, as the price drops, as long as the fundamentals remain intact, and that's the key piece, as long as the fundamentals are still there and the price drops, you jump in. As long as everything's still there. Now, you're going to go against the bearish sentiment. You're going to go against all that. And so he's kind of doing some active investing. So instead of just buying and forgetting about it, you need to pay attention. You need to make sure these types of projects are still moving forward and that they're not all falling apart. And maybe that's why the price is dropping. And so you have to understand that you need to stay in touch with the project, stay in touch with the team, the management, the partnerships, things like they're doing like that. Now, going back to Bitcoin, right? If you'd understand the fundamentals of Bitcoin, then maybe that would have helped you to hold through all that time to finally reach the 2017 breakout year. Of course, now since then it's dropped back down, and then some people weren't able to hold through and many have. And of course, we have that story, but there's countless stories of people who sold too early, right? Everybody probably has heard the story of the guy who sold all the Bitcoin for pizza. We have stories of people who threw away laptops with hundreds of Bitcoins mined on them, probably because they weren't worth any money. Now, another really good example of this is, he knew that I'm a real estate investor, and he kind of told me that it's like real estate investing. So let's say that like you live in this state and the county decided that they want to develop this area outside of town, and they're going to put a stadium out there. And it's going to be about 5 years from now. So you're like, well, shoot, if they're going to put a stadium, that means, houses and retail, development, businesses, entertainment, all of that. So I'm going to go buy land right next to where the stadium's going to be because I can buy it super cheap right now. Once the stadium's there, it's going to be worth a lot of money. All right. Now, but 5 years is a long time. So how do I hold that property for 5 years? And let's say that I'm holding it and then prices drop even farther. What would I do? Would I panic and sell that property? Well, no. The first thing I would do is I would check on the project. Is that plan still on? Are permits being pulled? Is funding coming through? Is work starting? As long as it's still happening, then I'm going to continue to hold. As a matter of fact, I might even buy more land because the thesis is still true. However, if I were to find out that the project is off and things fell apart, then of course I need to get out as quickly as possible. But we need to have that perspective. We have to stay involved in that if we want to be able to stay in for that 5-year run or however long it is until we get the benefit of that. It's just the price that you have to pay to make the big money from these types of things. Now, another example is Amazon. Amazon's a perfect example. You can see that just like Amazon, it had a big run up in the dot-com boom. The price went from about $5 a share all the way up to about $100. And then it dropped from $100 all the way back down to about $6. It was a 94% annihilation. Now, how many people got out at that point? Of course, it would have been very, very difficult to hold on. Now, he said that, many people like Jeff Bezos, who was able to hold on, obviously, and many other people around him believed in what they were doing. And so they didn't sell. They held on. And as a matter of fact, they didn't just sell, they actually bought more. And for those that did manage to hold on, they've seen over a 10,000% return since then. All right, so this brings us to the next success clue. He said that one thing he always looks for is the leadership of the companies. So when companies are either managed by very talented leadership or they have really heavy insider ownership of legendary deal makers, that's a really good sign. He said, of course, if you can find both of those in the same company, then you have something really, really, really good to look at. So the big question is, what is he investing into right now? What are the deals that we've been looking at together? Well, I would say first off, 3 words: gold and silver, right? That's the area that he really likes. Like I said, I'm kind of Bitcoin, he's kind of gold, and we kind of meet in the middle. But he really believes that the profits and the margins of the producers are so high right now. Their balance sheets are just, piling up with cash, and they're going to use this to make acquisitions. They need to make acquisitions because the majors haven't been investing into it for a while because the prices have been down. And of course, as these people use this cash to start making acquisitions, that's when the big institutional money comes in. Of course, we've already started to see that with Warren Buffett. Other investors have started to jump in. And when that happens, of course, the share prices go up. Now, you know that I normally like to be in the producers, and I typically stay away from exploration plays just because it takes more specialty knowledge, and there's a little bit more risk. Of course, with more risk comes more reward. But if you want to make the dot-com boom style returns or the crypto boom style returns, then that's where you have to look. And since, he's proven to me time and time and time again that he can win over and over and over, and he's given me his system, then of course it makes me have to pay attention, and I want to share that with you. And so one of the companies that we've been looking at together, like I said, really follows what his plan is as far as having a really big emphasis on the team and the management. So have you ever heard of Eric Sprott? Most likely, if you're involved in gold, you probably have. Of course, he's probably considered the Warren Buffett of gold. I think he's the only mining investing billionaire to ever live, at least according to a Forbes article that I saw. So he's always, so we're always seeing what Eric Sprott is doing. Like I said, he's the Warren Buffett of the space. And so my friend is also watching Eric Sprott, of course, right? And so we want to see, what is he investing into? What sectors, and specifically what companies? And there's a really small miner that Eric Sprott's been putting tens of millions into. He currently owns about 20% of the company, and it's called Great Thunder Gold, and it trades in the US under over-the-counter stock. It's GTGFF. And Eric's team, one of his longtime business associates, Blair Noddy, who's the CEO, he owns about 17% of the company, which means between these two guys right there, they own about a third of the company, which is an amazing thing to see that much inside ownership. And Eric Sprott was the shareholder in 2 of the largest discoveries of this decade, which made him the multi-billionaire that he is. And of course, we want to make sure there's something that makes these undervalued as well, something that gives us a reason to think it's going to be worth more in the future. And we can easily see that with Great Thunder Gold. They've been buying up land stakes and claims all around the area in Canada where the biggest names are already mining, and they grabbed the last major unexplored land package. And like I said, this is all right in Canada, which is a really friendly jurisdiction and district to mine in. And these other companies that they're surrounded by have already seen their share prices go up by over 3,000% just in the last 5 years, which is amazing. And some of those companies had Eric Sprott on as the shareholder as well, which is why he's made so much money. Now, if you're detecting a potential pattern here, then you're paying attention. All right. Now, in the past 5 years, for instance, if you track down companies who were conducting exploration programs and they were drilling their projects in order to either find minerals or to grow their existing portfolio of resources, you're going to notice that in many of these cases, once the news become public, then the share price starts going up. And usually it goes up triple digits in probably just usually weeks or months if you look back at it historically. So of course, the idea, like anything, is to get in early, right? You want to get in, get your position before they discover that, right? Before that hits the news. And while the drilling takes place, you're already an owner. So once they discover it, once they announce it, you're already there before the news is announced. So if you can get into a company, a great company like Great Thunder Gold is today, it's kind of like buying real estate before that stadium is built, or it's kind of like buying Bitcoin, years and years and years ago. But look, these deals were shared with me as examples of what he's looking at, and more importantly, how and why he's looking at them. But remember what he taught me, all right? That's getting the timing right is hard. And to make huge returns, you need assets that are volatile, and it works both ways, all right? So you have to follow a proven system, you have to invest along a proven team, and you have to buy at undervalued prices. If you can get all of those things, then you have to have the long-term perspective, because you know that the price is going to be volatile and you can't focus on that short-term price. You have to focus on that long-term picture. But if you can do that, if you can do all those things, then you have massive potential for upside. So let me know what you think. Do you see the long-term potential in gold like I do? I mean, I've been calling it the trade of the decade, all right? Now, I know a lot of people saw that in 2010, and a lot of people didn't, right? It's really hard to see that at the time. I saw it in Bitcoin. I'm seeing it in gold. Let me know what you think. Leave me a comment down below and let me know what you think. Of course, as always, give me a thumbs up on this video if you like it. If you don't like the video, give me a thumbs down, but leave me a comment and let me know why. Other than that, if you are going to be in the Phoenix area this weekend, please come meet up with me and George Gammon. It's going to be awesome. And then check out the live presentation I'm doing. All the info is in the link at the bottom. That's all I got. To your success. I'm out.